2, 1. All right. It is Friday. And as you know, on Friday, we do the Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. Thank you for doing this. It really does allow me to look back at a very busy and hectic week and try to take out the most major points. So it's been a busy week.
It has been a busy week for sure. This is September the 30th, the last day of the quarter. Obviously, going into October tomorrow. A lot has happened this year, and I think this is a good benchmark for, we're 75% through 2022. Let's talk about PCE and inflation. What did you see this week, and reflecting on where we're at?
Yeah, you got to remember a lot of pain, kind of the winter is coming. I've talked about 6 months of pain, just all of these things is because of inflation, right? Some of you will look at this and say, no, it's the Fed's fault. But realize that the Fed, Powell, is reacting to inflation. And we got the PCE, Personal Consumption Expenditure Report, this morning, which is their favorite gauge of inflation. And the core reading came in hot. Core is X food, X energy. Core was up month on month, up over expectations. So again, anytime you have inflation hotter and higher than the previous month, you can pretty much bank on the Fed hitting us again with some more rate increases. So November 1st rate increase is looking likely, because of that, and also because the job market. On Thursday, we got unemployment claims. They came in sub 200,000. It was 215 last week. So again, the job market's strong. Inflation is hot. It's got to keep fighting. So basically, the short answer is inflation is still hot. Fed's going to keep raising. No pivot in the near future for sure.
Got it. And when is the next Fed meeting?
So I think it is November 1st, I believe. I could be wrong, but I think the next one's November 1st.
November 1st. Okay. And so potentially any speculation yet what the Fed will do in that next
75 basis points. It's pretty much a lock. If inflation accelerates more, could we get the dreaded full 100 basis? Maybe. But I think, I think the odds right now are like 68 or 70% for a 75. And I think they get worse, meaning higher odds from here. I think 75 is a lock.
75 is a lock. Okay. So we're going to look into that. I'm going to throw you a curveball. We talked a little bit pre-roll. There is a short clip. It's about a 2-minute clip. Ray Dalio, one of the biggest, most successful hedge fund guys in our history. He's interviewing Paul Volcker before Paul Volcker's passing. Right. Paul Volcker was the Fed chairman back in the 70s, 80s, right? And obviously did some historical things with regard to rate hikes and such. You've talked about that before in the past on this show. He talked about specifically what he had to do in order to get ahead of inflation or to basically stop inflation, and then also the trickle of how it affected unemployment, a 10% unemployment rate. So speak to maybe, and you said a little bit of this yesterday on the Daily Financial News, comparing this back to the last 50 years, you studying the 70s and 80s. Tie this all together, your thoughts on Paul Volcker and what they were talking about.
Yeah. So if you're in this game and you're in the industry like cars or autos or housing or anything like that, you would do yourself a favor to go back and look at what Paul Volcker went through. There's a couple of things. So he basically went through 2 different raising of rate cycles, right? I think he took rates to like 12% down to 8%, and then ultimately was forced in a 6-month window to take them to 20. And you have heard Jerome Powell say, we're not going to pivot early. We will reduce or stop when we know the battle is won, because he knows that start-stop kind of process actually leads to a more painful, what's called double dip recession. And that's exactly what Paul Volcker, right? He thought he had it licked. He gave up just a little bit too early, dropped rates, the economy picked up, inflation picked up, and he had to go way, way high. Then you hear Jerome Powell talking about pain is coming. Again, by raising rates, reducing demand, it's going to impact jobs. In order for Paul Volcker to kind of finally defeat inflation, 2 things had to happen. One, Paul Volcker had to become the most hated man in America. mean, if social media was around back then, I couldn't imagine the poison that would have been thrown his way. Even back then, when we were just talking about, 5 radio stations or whatever, or TV stations and a couple of magazines, people had death threats. He was the most hated man in America because he was killing the economy. So I bring that up because I think Jerome Powell understands that he has to become the most hated man so that he can defeat inflation. But what happened is Volcker took the unemployment rate all the way up to 10%, double digits. And just for heaven's sakes, we're at 3.7 today. The Fed knows they have to go higher. I think their dot plot, which we talked about last week, had it going as high as 4.7. I think that's a joke. I think they probably are going to get it over 5 pretty easily and may get close to 6. But man, if they got to 10, that could be a problem. A lot of people are asking me, Michael, when would you say price drops are coming? And I've always answered with, if we have 10% employment for a year, that would be a problem. I mean, that could be a real big problem. I don't see that. I don't see unemployment going above 6. But hey, could we get to 10? Absolutely. Could we be at 10 for a year? I mean, anything's possible in this crazy world we live in, but that's certainly not my base call.
Very interesting. Very interesting. So obviously we're going a little deeper today. Obviously we've been talking about this. Michael's been talking about this for the last 3 months, 6 months, really the last 12, 18 months. This is coming and now it's here. It is on our doorstep. It's actually real. It's happening now in real time. Let's talk about the 30-year mortgage. What did you see this week, and maybe elaborate on your thoughts?
Yeah. So the 30-year mortgage, first off, the 10-year treasury spiked and hit 4% this week. It hit that Tuesday late afternoon, early evening. Crazy. It's down a little bit. I think it's at 3.74, but it did hit 4% this week, which took mortgage rates over 7. 30-year fixed rate debt, 740 credit score, 20% down, owner occ 7.08. That should take your breath away.
Wow.
We saw if you're in real estate, you saw what happened to the housing market at 6% June. Go back and look at your numbers. The market basically stopped. Now we're at 7. And sure, they maybe come back a little bit, but remember, we have another 75 coming in November. We have another 50 or so coming in December. The Fed's not done. Inflation is still hot. They're not going to stop. So this just means that the housing winter, housing depression, housing slowdown that we've been talking about, it's here. It's not coming. It's here. And it gets worse from here, right? We did something like 6.6 million transactions last year. I believe sometime between today and March, we'll do sub 4 on an annualized basis. So again, I don't say this to scare you. I say this to recognize where we are. There's going to be less and less people listing, and I'll just jump to it now. Inventory's down. A lot of people calling on a housing crash don't understand human psychology, and consumers, they're just not going to move, right? They've locked in low rates, 80% below 4, 50% below 3.5, 13 below 3. They're not going anywhere. So this winter is going to be very, very slow. If you're a real estate agent and you're only doing listings or only doing sales, you're in trouble. I have a post that I want to read from Jason Pritchard when it's ever is appropriate, because this kind of stuff, it's time to make sure you're in a good network. In the real estate industry, the last 2 years has been easy money. I'm on record saying it was the best time to flip, all these things. The next 2 years, not going to be so easy. There are some of you that need to take some losses. There are some of you that need to cancel deals. It's just going to be different. And fear's right here. Opportunity hides behind fear. I am not here preaching fear. I am preaching recognition and try harder, move forward. So maybe at the end of this, we'll read Jason's post, because I think it's exactly how I feel.
Absolutely. Absolutely. And we will absolutely stay tuned, stay on for this till the end, because Michael has something I think is critical to share. Jason Pritchard, if you don't know, is a highly, highly successful real estate entrepreneur. He's an investor. He's a buy and hold guy. He wholesales, he flips, he owns a lot of rentals. and he's also an agent. He's has a regular real estate business as well.
Mhm.
Somebody that I admire. I believe one of the top people in the country, especially right now, and making a lot of great changes. So stay tuned to the very end. Let's talk about, Michael, the bear market, the stock market. What did you see this week in the stock market?
Yeah, so there was a lot of hope in the stock market, and I use hope on purpose that what was called the June lows would hold. There were people in the stock market saying, "Hey, we're going to be at all-time highs by the end of the year." I actually have two guests on my show, one on Sunday, one on Monday, who up until this week were very confident that we would have all-time highs by the end of the year. And I never felt that way because, again, I thought the Fed was going to do what it said, but they did. So, a lot of them thought the June bottom would hold. Well, this week when rates came out, where the dot plot showed we're going higher, faster, longer, there's a lot of repricing. We've had some pretty horrible earnings announcements. We've had downgrades of people like Apple, right? You never downgrade Apple. Apple's is the best of the best. What the heck is Bank of America doing downgrading Apple? We have Meet Kevin talking about Tesla. Meet Kevin, in my opinion, is the biggest bull on Tesla. And he's talking about how Tesla has this currency or FX hit. So again, we're the last two companies, right? We had Apple and Tesla. They may be giving up. And I think if that happens, I'm not saying it is, but if those two take some real pain, you're going to see margin calls and capitulation, and people are going to really give up. But in the end, the June bottom did not hold, which a lot of people now mean that we're going to put in lower lows. Some people are calling 3,500, some 3,200, some 3,000. More pain ahead in the stock market, which may or may not be good for real estate. A lot of people who are buying homes to live in, their stock portfolios are decimated. A lot of investors may give up on the stock market like I did back in 2001 and just do real estate. So again, a lot of pain out there. Winter is here. It's again, I think the next 18 months are going to suck, but inside that suck will be a lot of opportunities.
Absolutely, a lot of opportunities coming. I want to just elaborate because Apple has been a golden goose, right? I mean, just absolutely incredible. And you look at recession cycles, in the depth of recessions, they've gotten stronger. They've doubled down on innovation. What was the news that drove Apple today, and what kind of was it?
There was a rumor that Bloomberg, I think, put out that iPhone sales in part of the product line were less than expected. Again, these are all rumors. I don't think anybody at Apple speaks. So I think this could have been a short seller trying to plant a bad seed. But basically, they plan to do 96. They plan to do 90, then 96, now 90. So that started it. And then Bank of America analysts actually downgraded the stock. So that was the big deal that they downgraded yesterday. Nobody downgrades Apple. I don't remember the last time that happened, but it did happen this week. So
very interesting times. So one follow-up question too from Paul Volcker and Fred Reserve. People talk about quantitative easing. Mm-hmm. Now, something I've heard a lot this week, and it was in that Paul Volcker, Ray Dalio interview, quantitative tightening. Yeah. What is tightening? What is QT? What is the actual mechanism of that? And how does that show up in the stock market, the real estate mortgage market? How does QT show up?
So essentially QE is basically when the Federal Reserve buys treasuries, or in this case, mortgage-backed securities at the depth of the 2020 crash. They were even buying corporate bonds. They basically become the largest buyer. Now, when the Fed's the largest buyer because they don't have to make a profit, interest rates go down. So they're just the biggest buyer. They crowd everybody else out because they're going to buy as much as they want. But now quantitative tightening, they're no longer the buyer, they're the seller, and they're adding supply to a market. So again, adding supply drives, and bonds are interesting, right? You add supply, prices go down, but interest rates go up. And if you've been on my channel for the last 6 months, since they announced that QT was going to start, I think the announcement was in February. It started in June and ramped in September. I've told everybody that will listen that QT scares me to death. We've only tried QT at meaningfully one other time in 2018, and it didn't end well. We had the taper tantrum. Dude, and the balance sheet's twice the size. It freaks me out. QT is going to break something. My hope is it breaks lots of small things, but it could break some pretty big things. QT is something to watch. September was the first month that it ramped to 90 or 95 billion in quantitative easing. And it's still coming. So we got to watch.
We've got to watch. We're going to stay tuned. We're going to talk a little bit more about that and keep our eye on that and get to a little deeper in the weeds and explanations on that. So stay tuned for that. Obviously, if you're not, follow Michael's daily financial news. It's the best. Anything and everything Michael does on YouTube, it's real time. It's real. There's no agenda. Michael, thank you for all that you share. I know we're not wrapping up, but we're going to continue. We've got two more pieces. We're going to tell that Jason Pritchard story and that quote here in a moment. But before we do, tell us about inventory. Inventory is falling. What's going on there?
Yeah. So again, a bold call I made 6 or 8 weeks ago as inventory was rising. So again, I like to look ahead and make bold calls. Sometimes I'm right, sometimes I'm wrong. What I told people back then, and this was early August, is I think inventory is going to roll over. I think what we're seeing is wish pricing. We're seeing a lot of people try to catch the top. They're going to miss it. It's not going to end well. So what we're seeing now is cancellations. We're seeing some expireds, but we're also seeing new listings down, and we're seeing total inventory down. I think we're going to have active listings lower in October, lower in November, lower in December. So again, demand destruction like we've never seen before. That was phase 1 of the housing crash in transaction. Phase 2 is starting now. It started September 15th and will run till March 15th. Again, giving you dates to look at. We're seeing an inventory crash or active listings crash. And again, yeah, there is no question that demand is down, but if supply goes down by as much or lower, prices are going to be firm. I'm not saying they're going up, but they're not going to crash. In order to have a pricing crash, you need supply to dwarf and continually come. And we're just not seeing it. Supply is not coming. And it's shocking a lot of people. A lot of people are calling for a 40% price crash, but inventory is not cooperating. If inventory falls more than demand falls, you can't have price deterioration. It just doesn't work.
Very interesting. Do you see prices just with inventory and because of rates softening? Is it reasonable 3 to 5, 5 to 8%, and depending on the product or depending on the?
So it depends on the location, right? Yeah. You have to know your market, your buy box, your area. There are undoubtedly markets like Boise, Phoenix, Vegas, Bay Area that are in trouble. But again, I look at Fresno and I look at the nation. And we will, in my opinion, we will not see a negative year on year for the year. I believe next year, again, I'm not calling anything crazy, plus or minus 2%. I think real estate's flat for 5 years. I think what nobody's talking about is we have a wage growth cycle like we haven't seen since the 70s. And if prices stay flat, interest rates come in and wages go up, we actually get more affordable. So I think we have a year of just terribly low transactions. We have wage increases. We have unions flexing their muscle and getting like the railroad got, 27% or whatever they got increase. I think that just keeps coming. And I think wages go up. I think the employee will be paid more and more. We have a very strong job market. JOLTS report, a lot of job inventory. So yeah, that's what I see. I haven't changed my mind. I reserve the right to change my mind March 15th, which I'm calling the end of phase 2, because I don't know where we're at. We could be in a bad recession, World War III. There's all things that could happen between now and March 15th. So right now, I just feel good about calling phase 2 supply destruction September 15th to March 15th.
Very interesting, folks. Stay tuned. Obviously, you want to stay connected with Michael and everything he's putting out content-wise on financial news. Let's finish strong. Let's talk about Jason Pritchard. Also, too, I just want to state this. As much as this news today felt a little like low and negative, we're just talking about what's real. Now, let's be honest. There's a lot of opportunity out there.
Yeah.
I have several investors that one guy got 2 deals in the last week that he hadn't had anything, and he's been preparing and working creative finance deals, by the way. So lots of opportunity to come. Let's be prepared, but also let's see the market for what it is. Let's finish strong with Jason Pritchard. Tell us Jason's story in his post.
Yeah. So folks that know one rental at a time, I have 7 rules that I live by. Rule number 7 is, for the last 2 years, let's be honest, was ignored. Rule number 7 basically says monitor your network. Are they helping or hurting you? Well, for the 2 years, everybody was making money, so nobody cared about rule number 7. Well, The good times ended. Now it's the bad times. Rule number 7 could be the most important one. And as an example, I want to read Jason's post. This is a story from his Instagram feed. His Instagram page is just Jason Pritchard. Look him up. Here it goes. Now is the time where you should be paying very close attention to how the people in your circle are thinking, talking, and acting. If they are negative, complaining, or playing the role of a victim because of what's happening in the market, I would be very careful with how much time you are spending around them right now. Instead, you need to get around people who are optimistic, driven, and focused on finding creative ways to set themselves up and take advantage of upcoming opportunities. It's going to get really uncomfortable for a lot of people. Surround yourself with others that are helping you become the best version of yourself. Enough said.
There it is, folks. You heard it here. It's time to stay focused. People that are driven, people that are focused at becoming the best version. I love it, Michael. Thank you for all that you do, all that you share. You can follow Michael at One Rental at a Time, all the different social media channels. I believe your YouTube channel is the best content for all things financial news, number one, and as well as all things real estate. Michael, thank you for all that you share and do. Have a great weekend. Thank you.
Thank you.